All right, y'all, so this is where it gets really, really, really exciting, okay? I'm going to give you an example of some new clients. I see this all the time, but I want to give you some real numbers because you're thinking probably this is too good to be true. Okay, so here's a married couple, very common. They have $62,000 in non-qualified money. We'll just call it after-tax money so it's easier, okay? They have $920,000 in a traditional IRA, okay? Real quick, rabbit trail here. What do you think IRA stands for? In publication 590, that's like the nerd Bible of the world, okay? But publication 590 says IRA on the front. If you think it stands for individual retirement account, you're actually wrong. It says individual retirement arrangement with it. So if it's individual retirement arrangement, you need to know that you have an arrangement with the IRS. And if you didn't know that, you need to know that. And this is why this is so huge, is because a lot of you are accidentally unaware of that. Okay? So anyways, $62,000 non-qualified after tax, $920, total $982, right? So first time I've ever met with them, we're going over some basic information, okay? Now over the next 6 years, which tax brackets are determining factors in our tax planning process together, okay? You and I are going to work together. I'm going to look at it. I'm going to find a sweet spot, okay? So what's really neat is we changed it. And let me make sure and reiterate. We changed it slowly but surely, very slowly but surely, okay? We changed it to look like this. $610,000, Roth IRA, $546,000, traditional IRA, and again, guys, I'm doing TIRA as traditional IRA. Total, $1,156,000. Okay? These numbers are higher though, Joseph. What the heck? What are you doing, right? Well, these numbers are higher than the previous numbers. This is the case because of using a conservative interest rate of 4%. Okay? 4% of growth over time. Okay? Over the 6-year period. Now, these folks are also still working, so they're still contributing year in and year out. Okay, so they're still continuing to contribute. Okay. The best part is we've already paid the taxes, what we owed the IRS. The government will make you a deal, and it goes something like this: give me what you owe me now, and I'll never talk to you about this money again. Okay, that's a really good deal, and you should take it, but you're accidentally not taking it. Okay. By the way, if you're not getting 4% on your money, then we should probably talk anyway. But okay, so now notice I didn't ask them to cash in their IRA or 401k and pay it all at once, right? We didn't take $920,000 and pay all the taxes right now in one shot. Okay, that's crazy. All right. So what did this really mean for the clients? Let's find that out. So again, guys, I know the numbers were higher. It's just because the money was growing and we were contributing to their 401ks, okay? So what did this mean for the client? They paid $94,000 in taxes over time, okay? So if they converted from traditional to Roth, we paid some tax now to never owe again, okay? So they owed $94,000. What did they save? That's the most important part, isn't it? Right? They saved $502,000. Real quick too, if you're wondering how would this look for me, it's normally a 4-to-1 ratio. So if they would have paid $200,000, they're going to save $800,000 in taxes. Okay, during their retirement. Let me definitely clarify. So Now, I'm using today's tax brackets as well, okay? I'm using today's tax brackets, which is very important for you to know. So how did I do this? Well, thanks for asking. Let's go into that, okay? So after meeting with them and designing a tax plan that will work for them, here's how it looks, okay? So they have $45,000 or so from their Social Security. And again, this is husband and wife, okay? $20,000 they will withdraw from their traditional IRA. Okay? And again, TIRA is traditional IRA. Okay? Now remember, this is still tax deferred. We're not saying to take every penny out and cash it in or something like that. Okay? So $25,000 will also come from their Roth IRA, because remember we were doing conversions, right? So we add this. What does this equal? 90,000. These folks happen to want $90,000. Okay, this is what they wanted. So my question to you is, how much tax do they owe? What do you think? They owe absolutely nothing. Okay? Their Social Security never is triggered and never becomes taxable. Their traditional IRA withdrawal is also not taxable because of deductions they have. And the Roth IRA, again, it's not taxable. Okay? Now let me be the first to say that this is very simple to figure out for me. Okay, I've been doing this for a very long time. This is not a gimmick, guys. Okay, this is real. Your retirement is real. Your income tax liability is real, right, isn't it? And it ain't going anywhere. Now, unless you consider changing from the government's default plan, which we talked about, then you're going to have issues like we just went over. I can help you. I want to help you. Give me a call. God bless you and your family.